Hello, everybody. Welcome to the latest episode of BBI LATAM. This is a video series from Bradesco where we explore investment trends across Latin America and emerging markets. I'm Ben Laidler, the head of equity strategy here at Bradesco in London, and I'm joined by my colleague Murilo Rossini from Sao Paulo, who leads equity strategy across the Andean region. So today we have the pleasure of being joined from Barranquilla, Colombia by Santiago Giraldo, the Chief Financial Officer of Tecnoglass. Tecnoglass is a leading architectural windows and glass company that's vertically integrated from manufacturing in Colombia to selling in the United States. Despite these Colombian roots, the stock's headquartered in Miami. It's been listed on the New York Stock Exchange since 2013 under the ticker TGLS. Putting it historically a little bit more under the radar screen for Latin American investors. Hopefully something we can solve a little bit with this interview. I'm just going to start with a few numbers as usual to set the scene. 1.9 billion, that's the current market capitalization of Tecnoglass in US dollars. 18 million, that's the average daily traded value of the stock over the last 3 months. I think if you were actually listed in Colombia, that would make you one of the top 3 most liquid stocks there, interestingly. And finally, 15%. That's the compound annual sales growth of the company since the IPO in 2013. So a pretty impressive number. So that's enough from me. Santiago, thank you very much for coming on. Maybe before we dive into the business, you could just tell us a little bit about your background and how you came to be the CFO of Tecnoglass.
Absolutely, Ben and Murilo, thanks for having us. Happy to present Tecnoglass to all the audience. By way of background, I was actually on your side much longer than I've been on this CFO role. I was a banker for JP Morgan and Citibank. In my previous lives, I lived in the US for 10 years after graduating from my MBA, and then moved to Colombia to work for Citibank in the investment bank, mainly focused on oil and gas at the time, in the corporate investment bank. And then after that, I decided to move into the other end, being the CFO for one of the companies that you probably cover, Ecopetrol. One of their subsidiaries at the time needed a CFO, so I decided to make the move. And about 10 years ago, I moved to Barranquilla to take on this new challenge for Tecnoglass, which at the time, was a very nascent company into the, financial markets and being public, and they needed somebody with experience to kind of help guide the process. And it's been quite a ride indeed. I mean, I'm sure we'll go into more detail of that, but since then I've been here as a CFO and head of investor relations, and really happy not only for the current situation and how we have evolved, but for the future of the company.
So, Santiago, starting with the basics, what does Tecnoglass do, and what makes you different in this industry?
Yeah, this company started about 45 years ago in Colombia. It was a company that essentially assembled windows, and along the way, the owners and our principals right now found that the more vertically integrated that we could be, and the more value added that we could put into the process, the better and more profitable we could be. So they started investing into equipment to actually not only assemble windows, but transform glass, transform aluminum, and started slowly but surely vertically integrating the process. At first, it was a play mainly focused on Colombia, then it's expanded a little bit into the Andean region. And about 25 years ago, it was pretty evident that if we were going to grow, it had to be mainly into the US, which is a perfect market for a Colombian company that is based off of the coast and 3 to 5 days from Florida. So starting to develop relationships mainly in South Florida and in Miami, the company started doing a little bit of business in the US. At the time, it was only, I would say, 5% of our total revenues. And, a few years later, a couple of decades later, now it's 97% of our total revenue base. So essentially what we do is we provide solutions end to end for the architectural glass and window space. mainly high-end properties. So think about high-end condos, Class A office space, luxury lodging. And then in 2018, when we were essentially all commercial construction, including multifamily, we decided to make a move into the single-family residential space. So now today the company supplies windows and glass for both the commercial and single-family residential space, mainly in the US. We still do the Caribbean, Central America, South America, but 97% of our business into the US. And now much more diversified. 45% of our business is single-family residential, 55% of our business is commercial construction. So we compete in the high-end side of things. I mean, we essentially provide a product that is high value added, whether that is impact resistance, energy efficiency, soundproof. We don't do any commoditized products. Everything is built to suit. And really, we're now just becoming national. Our main core markets were the southeast of the US, but I'm sure we'll probably go into more detail as to the strategy of the company. But now the company is fully penetrating the rest of the US. That's what we're excited about.
Thank you, Santiago. Ben?
Yeah, that's great. I just maybe just following on from that. So big picture, how do you think about the sort of big structural tailwinds of this business? Should we think about it as a play on the US construction cycle? Should we think about it as a play on the sort of growth of South Florida or the broader sort of US Sunbelt states or something else? How should we sort of conceptualize the longer term trend?
Well, there's definitely different trends, not only industry related. Obviously, construction is cyclical. By being like in different segments, you know, we play on different cycles, right? Because commercial construction and single-family residential construction do not hit at the same time. So we tend to kind of smooth that over now with how differentiated we are. But there's definitely trends. For instance, you see much more glass than you see cement in the new structures that are getting built out, right? I mean, everything is aesthetically pleasing. People like views. You see trends related to sustainability. So for instance, impact resistance, obviously with everything that's going on with climate change, has become more important. And there are drivers that make it so there's more investment into impact resistance. There's insurance waivers. There is tax incentives. So there are things that are serving as a tailwind to our business, and that has been the case for a few years. Then also you have trends of migration, right? I mean, South Florida, as everybody knows, has become very popular. It's been booming for the last 5 to 7 years. Generally, tax-friendly states in the Southeast and the Sunbelt states are doing better than others. And that happens to be our core markets historically. As we'll go into our conversation, we want to expand geographically and become a nationwide company altogether. But yeah, immigration is also serving as a tailwind, not only within the US, from people relocating from high tax-paying states to these tax-friendly states, but also foreign buyers that want to invest in their second homes, mainly in Florida and the Southeast. So yeah, there's definitely trends that serve for, you know, as a tailwind to our business. Technology, you know, there's, you know, new technology that is being developed where windows now will serve as a power to buildings, right? In other words, you have windows that absorb sun energy all day, and now it's going to waste. Now there's technology that, you know, will allow those windows to power buildings, right? So there's a lot of stuff that is coming that will help our business continue to grow.
Fascinating. Okay, so on that, let's delve into the business. Marila?
Yeah, so my next question is, what is your current outlook for the US commercial and multifamily segment, including the backlog growth and key profit drivers?
Yeah, it's interesting, obviously, because when you look at the headlines, there's challenges, right? And a lot of our peers are not growing or they're decreasing volumes. And, obviously the cost pressures on the other side of the equation are not making it easier, right? But we're growing double digits. I mean, we've been growing at a CAGR of 15, 17% since becoming public. We're expecting to grow double digits. That's embedded into the guidance that we provided to the market. And the reason we're able to do that is because we're gaining market share, right? Not only in our core markets, but also expanding geographically. We entered into a new vinyl market a couple of years ago, and we're leveraging our competitive advantages. As you will see in our margin profile, we obviously have a much leaner and much better cost structure that allows us to price competitively if need be, but that's not the strategy. We want to be profitable. We want to get paid based on the type of quality of the product that we provide. But having a more efficient cost structure obviously has a ton of benefits. But we want to win with quality. We want to win with efficient lead times. We want to win with superior service. And that's what has allowed us to gain a lot of market share over the last 10 years or so. Our backlog, as you mentioned, is at a record level of 1.4 billion right now. So we have a lot of visibility, not only into 2026 and 2027, but now building into 2028. So despite the challenges that you're seeing in the market generally, we're very optimistic in the sense that we can continue gaining market share for the foreseeable future.
If I could just pick up from that, I mean, that was, I guess, the commercial multifamily, right? That's the sort of core business. But as you mentioned earlier, the expansion into single family, it's now, I think, what, 40% of your business? You've been doing it less than 10 years. I mean, it seems to be a home run, but it also strikes me that it's a very different business, maybe with a different cycle. Could you maybe just sort of talk about maybe how it's different and the trends that you're seeing there?
Yeah, and generally, if I was to break it down, we're expecting both segments to grow double digits this year. But I think it's coming from different directions. On the commercial side, we're expecting double-digit growth because of the backlog that we've been able to build up until this point. So we know what's coming, right? These are projects that are getting executed. No big surprises. We kind of know how that's going to play out. And again, that is more favorable conditions in our core markets and our ability to gain market share as we expand broader into the US. On the single-family residential side, just by way of context for the audience, we started in 2018 and did less than 10 million in revenues. Last year, we did 400 million. So we're gaining a ton of market share with a differentiated product, obviously competitive as far as pricing goes. But that segment is a bit more challenged. And to give further context, we are not heavy into single-family residential new home construction. 70% of what we do is repair and remodeling. So cycles hit differently, right? When you have a lot of R&R, the drivers are different. So for instance, when you have this level of inflation and very high mortgage rates, well, the people that are locked into a 3% mortgage rates are not going anywhere. So as opposed to buying new homes, they're going to reinvest in their current ones. That's where we are right now, right? So I think one of the misconceptions is for people to tie our business to new single-family residential construction, right? We sell very little to home builders, so that's not the driver for us. By being more exposed to R&R, you kind of mitigate the cycles and the volatility of the business. That being said, where that segment's growth is coming from is mainly from the geographical expansion that we're undertaking. It used to be that single-family residential was strictly Florida. We have opened up 6 showrooms throughout the US: Manhattan, Charleston, Houston, Phoenix, and Los Angeles. So we're now much more diversified. We're selling into different states. We have a new window that is made out of vinyl, which is 60% of the total addressable market, as opposed to 30%, which is aluminum. So that gives us a lot of options, right? That gives us a lot of options to go out and take market share and grow into different segments. So while we're projecting our core aluminum window market for the single-family residential space in Florida to be kind of flattish, maybe growing, low single digits, we're expecting the whole single-family residential segments to grow double digits all in because of the opportunities that we have outside of Florida.
That's great. So let's talk about that. Marina?
Santiago, going a bit deeper on this. So what are the main pillars of your growth strategy in terms of geography, product categories, and capacity expansion plans in the US?
Yeah, so in terms of product diversification, if you think about the way this works, we have been very focused on impact-resistant windows, right? So that means South Florida, that means coastal areas, so it could be the Gulf of Mexico, it could be the Carolinas. But then as you start expanding throughout the US, you don't need that type of window, right? So we went back to the drawing board and developed windows for the broader US market. That means a lighter aluminum window. That means getting into vinyl. So for the audience, just to differentiate, both products, a heavy frame aluminum window is required for impact resistance. But if you step outside into the Midwest or, the West Coast, you don't need that. So nobody's going to pay what that costs, right? But then on the other hand, a vinyl window, which is cheaper, is better for energy efficiency. So when you think about places that have, huge energy fluctuations, like huge temperature fluctuations, you require more of a vinyl product, right? So not coincidentally, as we were stepping outside of the US, we had to develop new products because it's not like you can just sell the same product that you sell in Miami in Phoenix. We are now at a point where we have the products, right? So we're now just starting to ramp up those products for outside of Florida. You have to first kind of have the product. We opened up showrooms to establish more relationships. We hire salespeople away from the competition, and we're ready to go. I mean, this year we're gonna sell probably around 60 million between vinyl windows and aluminum windows outside of Florida. So it's starting to contribute. That's why even when we project that the core market is going to be flattish or grows low single digits, we're still projecting the overall segment to grow double digits because of the opportunities to step outside of the core markets.
I wanted to go back to something you talked about earlier, which was, I guess, the capacity in Colombia, the sort of DNA of the business and the building of the sort of virtual integration strategy. I look at your profit margins, they're much higher than your competitors. How much of that is because of the vertical integration? How much of it is something else? And maybe if you could just sort of talk us through, the degree of vertical integration and what you see as the benefits there.
Yeah, so we'll start with the footprint of the business. We are fully vertically integrated in the sense that we buy raw materials. Even, the main two raw materials that we have are raw glass, which is the glass that is just sand turned into glass, and raw aluminum billets. That's 85% of our raw material cost. The aluminum we buy from traders, that's a commodity. The glass we buy from a joint venture that we have with Saint-Gobain, which we announced a few years back. So that gives us efficiencies. And then from then on forward, we do everything end to end. We take those raw materials and we transform that glass to make it impact resistance, energy efficient, soundproof. We take the raw aluminum billets and we make the frames. We assemble our own windows. We export to the US. We have our own distributor to get it to the end client. We have our own installation arm to do the installation on commercial products. So what that does is to leave us a higher margin profile, right? When you're not like having to leave margin outside of your house, so to speak, because you're able to do everything in-house, your margins are going to be better. On top of that, if you look at our business model, it's kind of like taking the best of both worlds. We're able to manufacture in Colombia, where the minimum wage is probably the equivalent of about $3 an hour versus our US counterparts that are paying, I don't know, $25, $30 an hour, if not more, right? But we're also having the benefit of transporting from Colombia to the US. And if you think about this, Colombia is one of the few countries in the world that has a trade deficit with the US. So we're benefiting in a big way from having a much more efficient labor cost structure and also having the benefit of having efficient transportation into the US. There's a lot of containers that come from the US to Colombia that are full, that are going back empty because our main exports countrywide are commodities and that they travel by bulk. They don't travel in container ships. So we're able to use that dead weight to get back into the US very efficiently, right? So all in all, to answer your questions, if you take our EBITDA margin for 2025, I think we ended up at 28-29%, which is significantly higher than the industry average, which could be in the low teens. Maybe a well-run company is hitting 15-16%. So there's a good 15 points of difference between what we're able to achieve and what a player in the US is able to achieve. I would say maybe 60% of that is attributable to the arbitrage on labor. And then the rest is being able to have a fully vertically integrated model, as well as cheaper SG&A. Not only labor, but everything else that comes with it, and being able to manufacture in Colombia, but selling into the high-end market that we sell into the US. So it's a good business model. We take advantage of having labor availability in Colombia, very qualified. We've been doing this forever, so a lot of these employees have been here for 5, 10, 15 years. So when the question comes about how somebody could replicate this, is very difficult. This is something that has been in the works for 40 years, right? From the ground up, growing it organically and developing talent inwards, not necessarily being able to going out and getting, new employees to do this, which will be very challenging.
Right. Marila?
Yeah, Santiago, and discussing a little bit more of these challenges. So how are you managing the cost pressures, particularly related to tariffs, which are highly discussed, and also aluminum prices and the Colombian peso, which is something very important for the company, right?
Yeah, so let's start with the input cost, and obviously they go together because tariffs and aluminum costs are quite correlated. If you look at what's happening right now with the things that the administration put in place in terms of tariffs, aluminum was hit pretty hardly, right? And the way that is kind of laid out is, okay, if you are able to supply US aluminum, you can bypass most of the tariff. You still have to pay 10% on the way back out. But what has happened is that the US is not self-sufficient as far as what it is what it needs for aluminum internally. It is only able to supply roughly 40% of its internal needs. So obviously, if you look at what has happened with not only LME, because of the war and some other disruptions, aluminum has gone up quite a bit, but also the US premium, the US aluminum premium has gone up over 350% year on year as a result of these tariffs, right? Because everybody's looking to purchase US aluminum to bypass the tariff. What's happening right now is that it's almost indifferent, right? I mean, it's almost indifferent if you pay the tariff or if you buy US aluminum. So what was intended to be something favorable for US manufacturers is not the case. Because as a US manufacturer, you're having to either pay for the US aluminum at a much higher price or import the aluminum from a different place since the US is not self-sufficient. So it's a wash, right? This is impacting everybody altogether. That said, because this is impacting everybody altogether, everybody's raising pricing, right? So, as expected, not only with our business, with many other businesses, if you look at what's taking place with inflation, everybody is having to take pricing actions, right? It's one of the few ways to counter and offset the impacts of what's happening. So we were able to adjust pricing in May 7%. That's on the lower end of the industry because we feel that we're in a position to take market share. The industry as a whole raised prices between 6 and 12%. So by doing kind of like the lower end, we feel that we can further go out and penetrate the market and take advantage of the disruption that is taking place right now. Obviously, there's probably short-term pressures on margins, but we don't feel that this is structural. At some point, it's going to kind of reverse and alleviate some of this. We don't know what's going to happen with tariffs. But in any event, we're fully prepared to fully offset the tariff impact in 2027 by doing automation, by doing logistical improvements, and by the price increases that took place in May. So obviously, we're still going to have the impacts of higher aluminum, and we'll see where that goes. But we're going to be able to fully offset the impacts of the tariffs that were put in place this year. On the other end, you have FX, which for those of you that follow Colombia, right now the peso is abnormally strong in our view. And our exposure is mainly to the local cost that we have to pay mainly for labor cost, right? We're doing automation throughout this year, so we think there's going to be a headcount reduction that we can put in place, thus lowering the exposure to FX, to those expenses and costs denominated in the Colombian peso. So I think that's going to be kind of going down gradually. But in terms of being able to mitigate that exposure, we do opportunistic hedging. We try to be able to hedge above our budget rate, therefore just kind of taking that variable out of the equation and trying to reduce that exposure as much as we can, right? I mean, if we're able to dollarize some of these costs and expenses, we can do that, and be able to be opportunistic in terms of hedging. Right now it's abnormally strong, but our feeling is that based on the overall country's finances and the rate differential that is abnormally high right now, we think that's going to normalize longer term.
Interesting. Okay, so it's time for the quick fire round. This is shorter questions and shorter answers. I want to talk strategic focus, right? You've talked about growth, you've talked about efficiency, you've talked about innovation, automation. What's the focus? Where are you spending, of those three, where are you spending most of your time right now?
I would say growth. I mean, product development, market share taking, just pushing, our products throughout the US, getting to be a true nationwide company. Obviously, innovation matters. New products are important. New technologies are important. But I think what we want to do is expand, grow, take market share, and become twice the company that we are in the next decade.
Very clear. Marina?
Yeah, so capital returns. What is your current priority for capital returns? So dividends, share buybacks, on other alternatives?
To the extent that we can continue reinvesting in growth, working capital and CapEx, the return on invested capital is much higher than the alternative. But if you look at the cash flow generation over the last couple of years, we've been able to invest significantly in growth CapEx because maintenance CapEx is less than 1% of revenues here. So we have a lot of discretionary CapEx to support the ongoing growth. To the extent that we can find ways to continue growing, that's the highest return that we can achieve. However, because of the cash flow generation, we have invested over 150 million in buybacks. We obviously see an opportunity there based on current valuations. And the company pays a quarterly dividend at about 1% yield or so. So we want to make sure that it's a balanced approach, reinvesting in the business and returning cash to shareholders.
Right. You've talked about some of the inevitable pressures and cost pressures of the business, but if you look across the risks and some of the headwinds, competition, interest rates, the Colombian peso, what's the one that, I don't know, either worries you or you spend most of your time trying to mitigate?
I think we're controlling what we can control, right? I mean, in terms of looking for efficiencies, in terms of like doing pricing actions when there's price elasticity, we're doing that. What we can control is, how the rules change. And what I mean by that is it's hard to kind of run a business when you wake up and there's new tariffs in place, right? And we don't have clarity as to what this looks like long term, right? And as a result of that, you're seeing raw material inflation, right? That is impacting everyone. So we'll control what we can control. And from a macro perspective and geopolitical perspective, the hope is that a lot of these headwinds kind of move out of the way and we'll be in a better position, meaning we will have grown 10, 15%, a much larger company with some of these pressures that we're currently seeing.
Right?
Interesting. Yeah, so last question, Santiago, and a very important one. What is the biggest misconception investors currently have about your business, in your view? And what is the key point you believe they're missing?
Well, I think your viewers will probably have a lesser misconception that some of the US type investors that we come across, right? Because when you're exposing the Colombian angle, obviously that comes with huge benefits, right? In terms of how profitable we can be and how efficient we can be. But it's also hard to not get bucketed into other EM markets, meaning getting Colombia bucketed with Venezuela, for instance. Obviously, completely different situation. Or some of the geopolitical turmoil in the region that, despite us having kind of a leftist government for the first time in a century in the country, we're not experiencing, right? I mean, we have experienced kind of a stable democracy, not any hyperinflation, right? So I think it's important to understand what it means to manufacture in Colombia. We're trying to portray that this company is US-centric in the way that so long as the U.S. economy goes, so long as the building industry goes in the U.S. will go, right? The fact that we manufacture in Colombia should not be perceived as an incremental risk, right? I mean, it's not like the company, is in risk because of the geopolitical tensions around the region. The main drivers are related to how the U.S. behaves. So that number one. And number two, I would say that when you see the general headlines and the leading indicators that tell you, okay, new home construction is down 20% year on year, we get bucketed into that. So I think it's important to understand two things. Our main markets are outperforming the broader US, and we're not necessarily tied to new home construction, right? We have a more resilient business model. I would say generally that would be the main three.
It's great. I think that's a good place to end. Santiago, thank you very much for joining Murilo and I and discussing Tecnoglass.
Appreciate you guys having us.
Thank you,
Great.
Santiago.
All right.
So that was another episode of BBI LATAM, the Bradesco video series exploring investment trends across Latin America and emerging markets. If we've whetted your appetite and you want to learn more about Tecnoglass, please head over to their investor relations website. That's investors.tecnoglass.com. Thank you. Goodbye.